The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 22nd magnificent Monday edition of the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. If you're a father, hope you had a wonderful Father's Day weekend, Grandfather's Day weekend out there. Hope you're off to a great start of your day. Let's make sure that we do everything we can to have a magical, magnificent, extraordinary Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When we know that life happens for us, it means we can find the gift in every set of circumstance that life is going to throw out at us. Today, we're going to go take a look at the circumstance of the markets. We'll go look at the buyers and the sellers. We'll try to identify what the markets are doing. I'm absolutely grateful for your presence here today. I'm here to serve you. So feel free to dial on in at 877-927-6648. Of course, internationally, you can also pick up that phone at 727-445-1044. This is Magical Monday here at the Hotel California. TFNN, I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 110 points, trading at 18,126. S&P is up about 14 points. She's trading around 21.24. NASDAQ Composite up 33 at 51.50. Russell 2000 up 6.5 points, trading out at 12.91. How about that DAX over in Germany? Closed up 420 points, up almost at its session high for the day, closing out at 11,460. The FTSE up 115 points, closed at 68.25. Goldilocks is back $17 and change. She's trading at 11.84. Silver is unchanged for the day, trading out at $16.11. Light sweet crude back 31 pennies. You've got the euro yen moving higher, the euro moving slightly higher out here. Japanese yen versus the U.S. Dollar versus the Japanese yen. It too is moving higher. We'll take a look at the currency pairs. When we take a look at the sectors inside the S&P 500, 8 of 9 are in the green. Utility sector is flat. It's back 2 pennies. Leading the charge, the upside today in the markets. Netflix right now is up $14, a little over 2%. Bluebird Biotech up 5%. Cigna up 5% to the downside. Ambarella off $22. That's 19%. Today, we'll take a look at that. Priceline is off $9, less than 1% out there. So where do we begin our day out here? Where do we begin our journey? Let's look at multiple time frames. We most certainly have to take a look at multiple time frames. First, just to get a gauge as to what the market is doing right now, let's just go take a look at a couple of intraday charts out here. If you're watching this on TigerTV, I hope you are. The chart we're looking at on my screen right now, it's got 3 different time frames. This is the S&P futures contract. The left-hand panel is a 120-minute, 2-hour chart. Center panel is a 30-minute chart. Then the ultra side of quick trading out here, you got a 10-minute chart in the S&P futures contract. If we take a look at which chart looks the most significant to me? Well, it's really the 10 and the 30-minute chart. I say the 10-minute chart. Let me put this up on my screen here for you. You'll see what it is that I'm talking about. Last night, as the market opened, so we had Friday, the market traded lower into the close, specifically in the futures contracts out here, closed out at their session lows. And then as the market opened last night at 6 p.m., we had a nice little gap up in price. And price continued that move. So off of yesterday's low, this, by the way, it's a 10-minute chart that we're taking a look at. Goes ahead and makes that nice little 7th inning stretch candle formation, that 7th wave pattern as we take a look at the counts utilizing the Chapman wave out here at 11:30 this morning. Actually confirmed at 11:40 this morning. Gave you that 7th wave session to the upside. That's going to be important for us to watch because if that high gets taken out, nothing more bullish than a failed bearish pattern out here. Again, you got to stay inside the time frames. You know, if you use a 10-minute chart, then only trade based upon 10-minute information out there. If you're going to trade daily charts, then just focus in on the daily. Otherwise, you're going to get too darn confused out here. So as we take a look at the 10-minute chart, you know, it showed at least a short-term topping condition out here. Right now, the low of the day in that 2113 area is the support for the ES Mini. If we take a look at the, now we'll come back here. If we take a look at the 30-minute chart, what did I say, around 2113 or so? If you take a look at the 30-minute chart out here, you're going to see some dashed lines on my screen out here. Those dashed lines, that's the horizontal trading range boundary lines that are established over the last 1,600 bars, with the exclusion, I'm not taking a look at from the contract close at 5:15. I'm not looking at anything until the 6 o'clock in the morning. Otherwise, I'd be just on a 30-minute chart to be picking up a lot of basically no movement out there, and it would impact these horizontal trading range levels that price tends to move within. And you can see right now inside the ES Mini, you're trading at 21.15, 21.12.50, even though it says 48 on my screen. You've got to round in quarters out here. 21.12.50 becomes your level of support inside of the ES Mini. You move below that, that says you can easily move down to the 2100 level. That would be getting back into the Friday area, into yesterday's gap to the upside. So very important for the ES Mini to hold this 2112. So that's taking a look at what's going on the very short-term time frames for the S&P futures. Okay, so we've got that out of the way. Now, because the futures had moved higher since last night's opening, we saw fairly large gaps up. Now, let's go take a look at what's going on the longer-term charts out here. In fact, let's go, since we were looking at the ES Mini, let's go take a look at the S&P 500 first. So we'll come back to the composite, because you're going to get different stories based upon different time frames as we take a look at these charts out here. Now, in the case of the S&P 500 cash index out here, what both you and I know is this 2126 level is a level of resistance. Now, it's a level of resistance based upon using those same horizontal trading range boundary lines out here. We're taking a look at opens and closes of candle sessions. And we've seen 5 times where price has been up in this level out here, and it's acted as a resistance zone. So today, if you see some type of close above, now look, I'm not going to say 21, and it's a weekly chart, by the way, that we're looking at. So really, this chart doesn't make a whole hill of a lot of beans out there, right? Until when? Until Friday. But nonetheless, we want to take a look at what is really going on. Areas of significant resistance out here to see if any of these levels have been taken out. In the case of the S&P, even though the number is 2126, let's call it 2134 with some type of conviction. If you move above that during the week, at the end of the week, 2177 becomes the next target area for the S&P 500 to move up to. So that takes care of intraday style trading inside the ES Mini. That takes care of intermediate term trading by taking a look at the weekly numbers inside the S&P 500. So we've done a pretty good job of taking care of that. Now, let's do this here. Let's go take a look at what really has had legs in the market, and that is the Russell 2000. Now, in the case of the Russell 2000, let's do this in reverse order. Let's start with the weekly chart out here. So as price gapped up inside the Russell 2000, you're going to see the number 1290.87 on my screen out here. That happens to be the weekly horizontal trading range boundary line, a significant level of resistance. Guess where the Russell 2000 is trading into right now? 1290.78 versus 1290.87. A little dyslexic, wouldn't you say? Dyslexia is a good thing, by the way, but we won't get into that at the, well, it is a good thing because you get to see things differently. You want to be dyslexic when it comes to trading so that you can see things differently, but just make sure that when you're placing your orders that you've got some other system that is in place out there. So what we know about the Russell 2000 is it's run right up into a natural level of resistance. Any close above 1291 out there, that says you're looking at about 1319. That's what's going on when we take a look at the weekly chart. Now, let's dive down and take a look at some intraday patterns here inside of the Russell. Let's take a look at a 30-minute 30-minute chart. We looked at a 30-minute chart inside the mini. Let's go take a look at a 30-minute chart inside the Russell. Now, we're taking a look at the futures contract. I've got a 10-minute delay inside of this, so it shows price at 1286. It's off just a tad from that. But here's what we do know with regard to the Russell 2000 in its 30-minute chart out here. Just like we were looking at that seventh wave session on a 10-minute chart inside the ES Mini, we've got that same pattern plus one more out here inside of the Russell 2000 on its 30-minute chart. Because as it got into that seventh level out there, seventh heaven, stairway to heaven out there, what it also was doing was it gave us a little price relative strength divergent pattern. And it did that just as it was making, let me get the exact time frame out here. I think that was also at 10:30. This is, again, a 30-minute chart out here. Gave us a nice little shooting star. That says that resistance for the day and for right now is going to be the high of that candle session inside the Russell 2000 on the futures contract. That number is 1289.20. So what has been, we'll call strength inside of the markets last time that we were together taking a look at the longer-term charts out there, I was laying out for you that the market, the message of the markets was that it wanted a higher price out there. And at this stage of the game, it has definitely proven to be moved to, what do I say? That fruition has, I'm going to skip over that. Here's what we know right now. There's on a 30-minute basis, there's a natural area of resistance out here. And until you see price close below 1282.50, there's no damage inside of the Russell 2000 on a 30-minute time frame. We looked at 30, we looked at 10 inside the ES. Let's take a look at the 2-hour chart inside of the Russell 2000, because here's what we do know, which is kind of interesting out here. Off of its low, by the way, that I'm referring to is the one at about 10 o'clock in the morning. That was on June the 15th out here. Off of that low, what we've actually seen, or what we saw here this morning at 6 a.m., and then a little bit of follow through during the 8 a.m. session, was we saw a potential seventh wave move to the downside. Now, that failed. That failed as the market opened. We saw price move higher, but it still has this price relative strength divergent pattern that is in play as we speak right now. So, in the great immortal words of oh, man. Talk about a brain fart, a brain contusion. Somebody in the den will tell me. Not so fast. Oh, my goodness. In any event out here, the 120-minute chart, at this stage here, it's bullish when we take a look at it, but it's got a cautionary signal out here for us to take a look at. So that was looking at. Now, if we take a look at what else is going on inside the contracts out here, the futures contracts, let's take a look at this. What the Russell 2000 has also done out here, this again has been strong legs out here. If you take a look at the swing point high from April 15th down the low on May the 5th out here, you'll see that there's a price projection, 1.272 price projection of 1290.68. Now, price today so far, what price has hit was a high of 1289.20 versus 1290.68. That's pretty darn close in my work out here. Any move higher, taking out 1290.68, that says price can move up to the 1315 level. Let's not forget, on the monthly chart, Russell 2000 still over time wants to get to at least 1350. You're only at 1286 as we speak right now. This is Steve Rhodes with TFNN. We've got the Dow. She's up about 97 points. S&P is up 12. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 102, S&P is up 12. So we looked at the S&P, we looked at the Russell 2000 out there. Before we take a look at currency pairs, commodities, and so forth, let's go back and take a look at the NASDAQ composite out here. And the reason we want to do that is, CMPQ, there we go, is because we're going to take a look at the weekly chart first. And one of the things that you're going to notice inside of the composite is she, too, is right up into, gapped up in essence this morning, right up into that level of resistance inside this 51.48 area. And that's been a that is the barrier. Any move this week about 51.48 inside the NASDAQ composite, and that's going to set up a move into the 53.17 area, natural area of resistance. That's what's going on inside it on its weekly time frame. Let me switch over to one other set of charts here on my platform, different platform, but give me a moment here, because one thing that we haven't taken a look at is the NDX 100. So earlier in the day, I was looking at this chart here. This is the NDX 100. And here's one of the things that I noticed in taking a look at it. You know, the composite is up over its 51.37 level. So it's up over that all-time high out there. Now, if we take a look at, that's the high going back into 2000. Inside the NDX 100, that's not the case just yet. The actual high, because it's trading inside that swing point, that's the monthly chart, by the way, that we're taking a look at, is 4816.35. 4049.98 was the bottom of that swing point. That's really what the NDX 100 is got its sights set on, is heading into that area. If at any point in time here, during this, I think it's really important to watch the. We probably get some pretty important clues here from the NDX 100. The high that you're really watching out here is the price level of 4562.33. That was the high from April. Now, as was making that high, what you'll notice. Let me just let me expand this up on my screen. Might make it a little bit easier for you to take a look at. As it was making that high out here, again, this is during the month of April. It was doing a couple of different things. One, it had moved higher with less relative weakness out there, but it never formed any kind of bearish reversal signal out there. Here's the deal with regard to price. Until you see a reversal signal, and I'm talking about a reversal candle out here inside of the stock market, when prices are moving higher, in lieu of that forming out there, prices are going to continue higher. Period. End of story. Volume or not out there. The bulls and the bears, what they can't do is hide. They can't hide. They create these signals for you and I to pay attention to out there. And that's the language of the markets. You've got to learn the language of the markets out there. You want to learn the language of the markets out here. What happened is that pattern never came to fruition because price in the month of May actually made a higher high out there, and it did it with more relative strength. So that pattern is gone by the wayside out there. Nothing that we have to really give too much, pay too much attention to. Now, if we actually take out that high, we could do that here today, tomorrow. Again, that high, that number you're looking at is 4562.33. Shoot, at that stage of the game, one of the potential reversal patterns to take a look at a Chapman wave out here, a seventh wave, that will have failed. That says that price is going to go hit that 4816 area. So oftentimes, at least I don't pay enough attention on a monthly basis. Got to look at the NASDAQ composite versus the NDX 100 out here. Perhaps it's the NDX 100 that really helps to provide us with information as to what the market's next moves are going to be out there. So that takes care of the composite a little bit on the NDX 100. Let's go take a look at what's going on inside of the summation indexes for three of our indices out here. The New York Stock Exchange. Yeah, we got to come back and take a look at it. We take a look at the NASDAQ composite in the center portion of the screen and the Dow in the right. What we know is that the buyers have control of the market. All price oscillators above the zero level. On Friday's push lower. They didn't get to reverse those oscillators to the negative side out there. Just pushed them down into that zero line where they rejected price, closed up just a tad above that. Has said that buyers were in control of the marketplace out here. In fact, if you take a look at the NASDAQ composite and the New York Stock Exchange as we speak right now, let's look at the NYSE out here. You can see, and I don't know how it's going to close at 4 p.m. But this chart here, its most significance is at closes of the sessions out here. But if we were to close right around this price level, 11,133, with these net advancing versus declining issues out here, this will have made a higher high inside that price oscillator. That is always a positive sign out here. No kind of divergence inside of the marketplace. But that's as of 1:29 in the afternoon. And nonetheless, at this stage of the game, it is the buyers, it is the bulls that are in control of this market, period. End of story out here. But we'll see what happens at 4 p.m. If we take a look at the VIX index, that is below the 50-day exponential moving average, which is priced at 1388. You're trading at 1284. That's liquidity central. Hey, when we get back, let's go take a look at liquidity when we look at the currency pairs out here. The euro, yen, the U.S. dollar versus the euro, Japanese yen, Great British pound. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 96, S&P is up 12 out there. Hey, what a great U.S. Open golf tournament out there, regardless of what you think of the course. And it's a setup in the greens and so forth. Pretty cool to have the tournament out on the West Coast and for it to, be going on in prime time. That way it didn't really interrupt my day out there. I got the opportunity to go out and play golf with my son during the late morning, early afternoon out at Grand Cypress Resort in the Orlando area. What a great course. It's one of my favorite areas just to play golf. They got a great practice facility there. And what a great deal, especially this time of year. If you can handle the heat out there, you can, if you use that golf now in your area, which is, that was bought out by the Golf Channel. Maybe we started by the Golf Channel. I don't know out there, but it's an easy way to be able to get tee times. You can find them for usually on the cheap out there. $35 is what we pay to play golf. That came with because of Father's Day. They went ahead and they gave us chicken wings. Not that we needed them, but they gave us a big pile of chicken wings. And I mean, it was a nice day. A bit hot, but they've got some nice shower facilities. In any event, I know you don't want to hear all about, but what a great golf. How about coming down to the wire out there, and I know that there's a lot that's going to be made. I believe there's going to be a lot that's going to be made about Dustin Johnson going ahead and three-putting that green. When his ball got hung up where it stopped after that really miraculous second shot out there, you knew that was going to be a super fast putt out there. And you can't forget that the guy who won, he three-putted on 17. There were a lot of three-putts on all those greens out there. So, the only thing is I wish those greens were more consistent. It didn't bother me that they were a lot like Augusta, where you had all those, you had to know where to actually hit the ball, but they just didn't seem to be consistent with regard to as consistent as they could have been out there. But what do I know? Never played that course, so maybe they're more consistent than what it looked like on television. All right, to currencies. You want to take a look at currency pairs out here. And, of course, we need to understand what's going on currency-wise because we're looking for different clues or variances. Because when we began the show, we started taking a look at, hey, what's going on inside the S&P 500, what's going on inside the Russell and inside the composite. Well, you and I know is that from an intermediate term standpoint, price is right up against resistance levels out here. So price has to, as strong as the market has been the last week out here, certainly today, price is right up against resistance out here. Until resistance gets broken, those people that are bears from an intraday shorter term standpoint, this would be the place you'd be looking to short the market from. Likewise, and the reason is because your back is up against the wall. You break resistance, and that says that price is going to move up to those next levels that we took a look at out there. So that's the cool thing about being able to identify these levels of support and resistance out here. We take a look at the Euro-Japanese yen, currency pair that both you and I are near and dear to our heart because of its directional correlation to the U.S. stock market out here. It's dealing with resistance as well, resistance from the trading day of June the 4th. It needs to take out that high, 141.05 out there. If it can take out that high, that says that price runs up into the 143.97. That'll go ahead and put some fuel inside of the fire, inside of the stock market fire out there, and that says that price will go ahead and break through that resistance area. At this stage of the game, we don't have that pattern. That is in play. If we go take a look at what's going on inside the euro versus the U.S. dollar, what do we have going on here? We've got a nice little rising price channel that has been in place ever since the, we'll call it the lows here of April the 13th. That formed the bottom of that rising price channel out here. We're just kind of mid-stroke as we speak right now. Price is above a market profile. Everything here looks to me like the euro wants to move higher out here. And if it doesn't move lower, it's going to find support around the 111 area. That's what's going on inside of that currency pair. If we look at the U.S. dollar versus the Japanese yen, and take a look at what it is doing out here. At this stage of the game, it's actually, you'd have to make more of a case, with the exception of today's candle, that's trying to form an A to B equals CD to the downside out here. But it's got to break below the lows here of the June 10th area, and that is at 122.46. That's what's going on inside that currency pair as we take a look at its pattern. And inside the Great British Pound out here, again, these are daily charts that we're taking a look at. It also is in a rising price channel coming back here into the April 13th time frame. That low has held thus far. Is there any kind of resistance out here? No, you're really above resistance. The resistance inside of the Great British Pound was set up on the trading session of May 15. Little bear sash, bearish engulfing, key reversals, what it looks like a type day out here. Nonetheless, even just a bearish engulfing. Says the high of May 14th was your resistance level, and that's at 1.5815. That level's been tested and rejected. Great British Pound looks like it wants to continue to move higher out there into the top of its rising price channel. If we go take a look at Goldilocks, you've got gold trading back $18 right now, trading at 1183.80. What is gold doing out here? Gold has been trading inside Stevie's blue box for what seems like forever. Forever being the early part, the middle part of February out there, and that's anywhere between the price levels of about 1232 down into the 1150-ish range out here. Gold not doing a whole heck of a lot of anything. It is trying to pull back into the 1178 area. That would be the 0.618 retracement off of the recent low, which was on the trading day of June the 5th, up to the high on June 18th. And that's really the pattern that's out here. Not a whole. If you're an intraday trader, go take a look at 30 and 120-minute charts for gold and make your decisions off of that. From a daily standpoint, just not a whole lot there. In the case of silver, up 4 pennies as we speak right now. Not doing a whole heck of a lot here off of the lows out here, off of a 0.786 retracement. It looks like is what it did. That's off of the low back here from March the 11th to the high out here on May the May 18th. Just not doing a whole heck of a lot. It's taken a little bit of a breather, but gold's been breathing and taking a bit of a breather since February when it set up that trading range out there. Light sweet crude back 28 cents, trade out at 59.33. Let's go take a look at it. Really not doing much trading with inside its market profiles between about the $57 to $60 and change range out there, so not doing a whole lot. Natural gas, that's back 8 pennies, trading at 272. What has it done recently off of the looks like a 0.618 retracement? Yeah, pretty close to exactly. That's coming off the low from June 4th. That was at 255, up to the high at 295 on June 17th. $2.70 as your point. 618 retracement. You got down to 2.75 earlier in the day. If that level doesn't hold, expect a test of the swing point from June 4th. And if it closes inside of that, which is 267, then you can be looking for a run all the way back down to the bottom in the 255 range. And that is on natural gas. So we looked at currencies. We looked at the commodities out there. Let's go take a look at, and that was pretty quick. Let's take a look at, let's take a look. What should we take a look at? Oh, let's go look at this stock here that has been hammered. I haven't looked at it all day. Ambarella, AMBA is the ticker symbol. Boy, I don't know what happened with Ambarella, but you do have volume off of its highs out here. That is for sure. 19, it's a daily chart we're looking at. 19 million shares. Why did I not see any news on this? There's got to be some kind of news on AMBA. Nonetheless, I don't see the news out there. Maybe somebody in the den knows what news event has triggered this avalanche of selling out here. We know about Ambarella on the daily chart. Volume off of the highs. As I say, 19 million shares. Last time we've seen any kind of volume like this was never. GoPro-related stock. Okay. Still, that's just huge out here. Last time this thing had any real volume that was a breakout would be, just looking for a real breakout here, has to take you back in time to the day of March the 4th. That's at a price of $64.30 out there with a high of 68.50. Could very easily be heading into that area out here. Let me put this on a weekly chart. See if there's anything here that sticks out. Let me see here. Ambarella on a weekly basis. The weekly chart says, yeah, that March 2nd area between 58.05 and 68.50. That's pretty likely. It's very likely. Pretty likely. Don't think that is got any room inside Steve-O's vocabulary out there. But very likely this will trade into that area. That is ticker symbol AMBA, Ambarella. Price line, let's go see if there's anything going on inside of price line. It's off $9, less than 1%. Let me put this back on the daily time frame out there. Thanks for your help, Mike K. Inside the Tiger's Den. Yeah, it did look like a bit of an Eiffel Tower out there, as our man Z has pointed out. In case of price line out here, not really doing a whole lot since its breakout session with volume. That was back on February 18th. Looks like it's headed for about the 1129.98 area before it provides us with any kind of information. Ticker symbol there, PCL. And we're looking at a couple stocks here moving to the downside in a day where we've got the markets moving to the upside. Off $6 and 6% is Synaptics out here. Also with the volume behind its move out here, that is a bit of a danger. Well, you've got potential support. Actually, I would have to say that its Synaptics, with the volume that it's got going today, easily could move and be targeting the 68.45 to 71.66 area, where it did have a breakout with nice, impressive volume of 3.8 million shares today, 1.6 million shares. Ticker symbol there, SYNA. Let's do one other to the downside out here. Let's go take a look at Humana, HUM. Part of the healthcare sector, off 3%, down $6 out here. Now this thing, what a nice sign of strength this baby had on May 29th. 9 million shares to the upside. You're trading inside that. If you were looking to buy Humana, let this thing come back into the 176.62 area. That may be your buy, and that is a breakout. Wide-ranging bar, wide-ranging volume out there, accelerating volume really on that trading session. Now, let's take a look at a few things here to the upside. Netflix up $16 out here. What is Netflix doing? Headed to the moon. It's got a high volume high is what it wants to do. That's from June the 10th. So just not that long ago, that high is 692.79. You're trading inside that swing point. That is what it wants to go test. 692. You're at 673 as we speak right now. How about Cigna Corp? CI is a ticker symbol, up $5 and change, gapping up, and that is already testing its high volume high from June the 15th. That at 14 million shares, you've done 6.8 million shares today. You'd like to see this close over that round number high of 164. That was on June 15th. You're 164.25 out there. As far as where this thing heads to, this is all-time highs. Steve-O doesn't have a clue. But let's see if the monthly chart has a clue out there. Is there any kind of pattern? And the answer, Johnny, is no, there is not out here. So no idea where Cigna Corporation is headed to, but stock chart looks pretty good. If we take a look at also moving to the upside, you've got, let's see, what do we got out here? Biogen. Let's go take a look at Biogen, see what it is doing. Not the monthly chart. Well, that's interesting, but let's go take a look at a daily chart. Let me see what. Okay, so as we take a look at Biogen, had a nice move here off of the. So what Biogen has done is the following two things, and the question is going to be: is this going to be in a trading range out here? Now, the first thing that it did, the trading day was January 30th, 2015. Do you remember where you were on January 30th, 2015? Well, if you were in Biogen, this thing had gapped up with nice volume, 4 million shares, the low of which was 372.75. That's our line of demarcation out here. What we saw take place inside Biogen just a few weeks ago, back on April 30th, was a test of that level. Got down to 368.88, closed at 373.93, so above that, and it did it on what? Light volume. 2.7 million shares were going against 4 million shares. That's the way you like to see price come back into a breakout area. What happened next? Price just simply continued to move higher. But where it's running into resistance, potential resistance, is that little supply line, that little gap down from April 24th, which had larger volume than that sign of strength breakup, because this has volume of what? 6.6 million shares out there, almost 6.1 million shares. However, what Biogen does have, it's a high volume high out there. And that high says that if you get it close above 421, doesn't have to be today, can be whenever, you get it close above 421, you're going to go test that high of 480.18. That is ticker symbol BIIB out here. If you're inside the IBB, you'd want to know what kind of weighting that is. Is it a top 5 weighting or is it a top 20 weighting? I don't know the answer to that. Probably should, but I do not know. Now, how about the Fitbit out here? Are you a person that wears a device on your wrist or your waistband to let you know where, you know, how many steps you've taken and all that mad science? So we've got Fitbit. Looks like the debut was a few days ago, June 18th. The low was 29.50. This is trading at 38.34 out here. Wish I could tell you more about it. Only 3 days of trading. I can't. And I don't wear any such device out there. I just count my steps as I'm taking them. Right now today, I can tell you I've taken 1,234 steps so far today. Just kidding you out there. If we take a look at, not that you even smiled or laughed with that one, but that was the best that I could come up with. Let's take a look at, and I probably could come up with more, but I won't. But maybe I'll come up with more when we get back from this breakout here. Maybe we'll round things out. Let's round things out when we get back from this break by taking a look at the signals out here that just say caution, Will Robinson. That's coming from Steve. Remember, I'm not bullish or bearish. It's what are the stock charts communicating to you and I. And on this 120-minute chart for the NQ, it is saying, as Lee Corso loves to say, he coined it, not so fast. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow, she's up 101. S&P is up 12. NASDAQ is up 31 points. Russell's up 6. So we began the show. We started taking a look at multiple time frames out there. That way, because we have all different styles of traders that are listening on the show. And that way, remember, the key is that whatever time frame it is that you trade under, just stay inside of that chart for making your trading decisions out there. I suggest that to you that right now the 2-hour chart is one for us to be paying attention to. And here is the S&P futures. And what we can see is that price has been moving higher. It's been moving higher, doing it with less relative strength out there. In fact, the first time the pattern showed up was right here at 6 o'clock in the morning. That was on Friday. By 10 o'clock in the trading session between 9:30 and 10, you had the confirmation that price was going to go ahead and move lower. I'm not going to show you the different levels of support where price moved down into. But even with this big move higher here so far today, price-wise, still doing it with less relative strength out there. Why is that important to watch? You'll see as I pull this back on my screen out here. So forget about any other patterns. So that's just this one to be paying attention to. Remember, you got to understand, or you want to be able to understand, your reversal signals. The whole responsibility of buyers and sellers when they check in for work is to paint signs for you and I. It's just it. It's just that simple out here. We don't need to complicate things. We had price moving higher all the way back here at about 4 o'clock in the morning on May the 19th. We had a nice little confirming signal at about 8 o'clock in the morning, and that was on May the 19th as well. A little bearish engulfing candle followed through on the next trading session. Price went ahead and retraced back into the swing points from back on May the 15th, it looks like. That's up at the highs. You know, the same pattern works down at the lows out here. And we can see that you had price moving lower with less relative weakness out here. That's never a good sign. It's a good sign of a bounce or bottom that's being put in. That's what took place in May 7th. May 6th and May 7th as it was forming as the ES, as an NQ, not the ES mini, that's what we're looking at, was forming its bottom out here. So this is important to be taken a look at. If we look at some of the other futures contracts, you're going to see the same patterns out here. So they're patterns that just simply, you can't ignore these. Right? Again, now that's if you're staying within inside the 120-minute time frame out here. We can see price has been moving higher, been doing it with less relative strength out there. Right now, you've got a bearish engulfing candle. This candle session finishes at, what, 2 o'clock? 2 o'clock. So you got 4 minutes on that. So between 2 and 4, if you see a move lower out here, it says price at least moved back down to yesterday's or Friday's low out here. Perhaps it's lower. This is the NQ. If we go take a look at the Dow futures contract out here again, just continuing to stick with our 2-hour charts out here. Let's go see what it is doing. Same type of pattern out here. The Dow's been moving higher, been doing it with less relative strength out there. So you just want to be cautious at this stage out here. I do believe prices will move higher over time into the middle of July out here. So there's been nothing that has changed from when we last shared that comment with you. It's just about, you know, where it is, when it is that you want to find that next buyable bottom. And you're up into resistance on the weekly charts out there. So that's what I would be paying attention to inside of the markets. Wait for some additional confirmation, tighten up your stops, whatever it is you might be doing out there. Now you got nice, strong, good movement in summation index, as I say, pointed higher, making higher highs inside that price oscillator out there inside the NYSE and the NASDAQ composite. And don't forget, the New York Stock Exchange formed a nice little Gartley buy pattern out there, and a Gartley buy always has 5 different outcomes. And if you were paying attention to your reversal signals, what we have not seen inside the New York Stock Exchange is any kind of reversal signal, even as it made the 0.786 retracement today out here. This is Steve Rhodes with TFNN. Stay tuned, our man David White. He's going to be up next, followed by the Tom O'Brien Show from 3 to 5. Have a marvelous Monday, folks. Look forward to seeing you soon. Take care.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning, you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
You're watching Tiger TV.